Welcome back to Zodiac Trader. So today we're going to look at a rather different topic. So in this episode, I'm not going to say who is right or who is wrong, but uh, I'm only going to share with you guys some of my doubt and so some of the things that I've been thinking for some time and something that I really want to share with you guys. So basically, this episode is about is uh, Bridgewater hedge fund really a Ponzi scheme, or that just say I wouldn't come to a conclusion because it would be risky, and but I'm just having some of my doubt, and I'm hoping that in the future, Mr. Ray Dalio and also the fund could actually demonstrate some transparency and to actually show to the Wall Street and other observers, for most of the journalists and hedge fund managers, it would be a lot easier for people who are professionals to really understand what's inside of the strategies. And I think if the Bridgewater can actually release some of the transparency, ironically speaking, and that is something that they've been uh, publishing on their official websites because they are always claiming that they have a lot of transparency. But when it comes to trading strategies, they began slowly shy away and they feel reluctant to really commenting on the details of how they are actually making profitable trades. But we all know there's no doubt that the Bridgewater is one of the largest hedge fund ever created in human history, and that is why Mr. Ray Dalio, he is a titan and also a guru, and he is also the reason why I kind of step into this macro trading market. Um, uh, that I was reading a lot of his pieces from LinkedIn, and I read most of his books. And his wisdom really is really, I would say, it's really helpful. The stuff that he say and the stuff that we've been writing, but it just kind of the stuff and also the trading strategy of how Bridgewater really kind of makes money instead of having these religious cults and everyone just simply saying something very vague and without telling precisely what assets or what asset classes that they are really kind of investing in. And so that's why I've been reading this article. And then there was a new book. It just came out and it got lots of attention. The name of the book is The Fund, Ray Dalio Bridgewater Associates, and then Unraveling of Wall Street Legend. So this book just came out, and the book is written by the Mr. Rob Copeland. And the journalist worked. He used to work for Wall Street Journal. He was the former reporter, and now he works for the New York Times. So I don't think this journalist is something like a bullshit that just came from nowhere and then raises charges against Mr. Ray Dalio. But some of the doubts that he mentioned in his article, it's a very long piece. I have read of it, and I will try to summarize those very important points for you, so you guys don't have to read it again. And not just um, Mr. Journalist, not just this Rob Copeland had questions about how how the biggest hedge funds in the on this planet actually make money. Lots of other hedge fund managers have the same doubt. For example, the Bill Ackman, Bill Ackman, he had doubt as well, because that was in the deal book. We all know like deal book was the Bloomberg thing. They have these conference, sometimes charity. So you have all these fund managers talk about trades and how opinions. And I've been following William Ackman for some time, the guy, he has many interesting thoughts, and definitely a must follow micro fund manager. And there was the meeting with between William Arkman and also Ray Dalio. So the conversation was actually quite intriguing. So because Mr. Arkman tried to interview Mr. Dalio about his secrets of making money. And this is what really happened. Like every time when you ask about how Bridgewater make money, they talk about macro, okay, sometimes. But when you are asking for specifics, they just say they are an algorithmic driven fund. They are relying on huge amount of data, and also they have these secret engine that have thousands of perhaps like tens of thousands of trading signals, and they are diversifying assets like 100 maybe 1,000 positions, and that's how they make money. They just Mr. W just keep being vague. And this is actually I'm going to read a little bit of the article so you to understand why I'm saying the conversation is rather interesting. So this session is happened in the Harbor Investments Conference, which is a charity event. So Mr. Arkman was a co-chairman. Okay, so he asked very directly, where would you put your money? It's that if you're on Bloomberg, if you're on CNBC, you get these questions all the time. You go to the TV, you go to any kind of financial, stuff related talk show, and when you talk to the journalists, they all stuff are from these simple question. And then he emphasized, let's say you were to buy one asset or one stock on one market or one currency. And then that that's supposed to be if you have a very interesting idea and you can talk about it, like for example, like many hedge fund managers talk about maybe they're not like buying or actually selling that underlying assets, but then if you talk to Stanley Druckenmiller, you talk to a lot of fund managers, they would just tell you, oh, I own a lot of AI stocks, I bought a lot of S&P or whatever. Do you have a slight clue of what they're actually doing? That's something that definitely be positive of, something that they're not really positive of. So, um, but in terms of that, like Mr. Artman didn't get a convincing answer because there was a quite an awkward pause because Mr. Dario said, "I don't do that," and he said, "Okay." Mr. Dario said, "I'm sorry." And then he said, well, then Mr. Dalio been saying something about, they have these artificial intelligence, finding possible solutions, it's just being very vague. And then they have these very awkward conversations. So, um, like that just, they basically mean nothing. They just disclose of nothing that, even though they try to claim that they are transparent, but they are not as transparent as they can be. So, okay, so that was one of the incident that happened in 2015 that it proves that, the other fund managers are also wondering the secrets. Is there any secret inside the largest hedge fund, Bridgewater, or it's purely a Ponzi scheme, or is that a pure scam? I'm pretty sure if you put that title in the YouTube, you probably get a letter from lawyer very quickly. So I'm not just going to put that as the cover from of my YouTube video because I'm a small time trader. I'm not like a big tycoon. I don't have a big ass lawyers team to help me cover these heavy fires. So I'm just going to leave suspicion here. And also, Jim Grant, an auditor, the author of Grant's Interest Rate Observer, he actually has some doubt And also, we're talking about David Einhorn. We're talking about Kyle Bass. David Einhorn is a green light capital, and also this guy, Mr. Marco Polo. He is the guy who tells that the basically the whistleblower that's investigating the Bernie Madoff Ponzi scheme, and he successfully done that. He has filed countless of reports and researches to the SEC. And then SEC just ignore it, and then a couple years later, then tens of years later, Bernie Madoff, the guy just went off. That the guy's bankrupt because it turns out one of the most successful king of the Wall Street, the chairman of Nasdaq, who claimed that he used kind of fancy strategy, algorithmic trading, that kind of strategy making so much money, is false. Right? There is no such as trading strategy. It's a Ponzi scheme that you use the new investors' money to pay off the older investors' money. So the Ponzi scheme, he got this out, all sorted out. So these Harry Marco Polos, he also has some doubt of Bridgewater Fund. So they have done a lot of research and also trying to get a lot of tape recordings, insiders view. But then none of it actually worked out. That just SEC just keep postpone it. There's something really wrong about SEC. You see every time Enron, you see this FTX case. You look at the SBF. You look at Bernie Madoff. It's like every single time SEC has failed to fulfill its obligation as a regulator, but somehow they just stayed there. The bureaucrats just keep postponing, ignoring those big giant Ponzi scheme because they are basically submitted to the power. So SEC as not like they have messed up so many times. So you have to really kind of suspect. For example, these FTX recent case, like how the hell this SEC bureaucrats not be able to see out what SBF been doing for a long time? He just stealing from his investors, plain and simple, right? So that's really happened so many times. So you can see there are many people who raised doubt on the Bridgewater. And also, if you look at how Bridgewater people actually respond to the book, and it's actually, I think it would be a lot better if you're not putting these reply on your website just like this, because it kind of make me to raise more doubt, right? Like I mean, the entire thing. Let's just look at the title of the article. The title of the article, it's very plain and simple, right? So how does the world's largest hedge fund really makes its money? So it's a simple question. So instead of saying, well, like our statement on recent book, blah blah blah, and then you kept mentioning about your philosophy, original philosophy, or be your idea meritocracy, or see what the statement to the Bridgewater community. That just it's kind of invasive because you are not answering the question. How does the world's largest hedge fund really makes its money? Are you like using CTA trading strategies, or are you betting on the bonds? What precisely you're doing? If you don't feel like you want to disclose your trading strategy, I mean, it would be nice to give a glimpse, maybe just maybe 5 years ago, maybe 6 years ago, for example, when in 2008, what exactly did you do? Did you actually short the index, or you long the VIX, or did you just long a lots of bonds? You put some leverage on the bonds. So what currency are you shorting? Or maybe you're selling some currency. You could instead of putting all these philosophical stuff and all these, you can simply just put on all of these trading records and account on it. And then I think if Bridgewater has done so, I mean, this book, who just the book just released on 7th of November, and this book would be gone completely, right? You don't have to go through all these stuff, right? This stuff is long, tedious. You don't actually get the direct answer from this. So I think this is a very lame and weak response to the book. It just kinds of as an outsider, I'm just curious, right? Now I'm even more curious, right? Instead of solving and letting me know what's really going on, that you're making me more curious. Like you can, for me, um, it will be really difficult to understand what the Bridgewater is actually doing. So for people who are really interested in how hedge fund society actually work, I think it's nice to read this article, because the author actually gives some, really intensive insights, and from these examples, and how, these Bridgewater do come together and without telling or disclose their trading strategy. Instead of that, none of their trades are making any wave. For example, if you refer back to Soros, the quant fund, it was a large macro fund, right? So if Mr. Soros is shorting a currency or maybe buying some interest rate swap, the trading floor people would know that. It's just even though you might be a big, maybe you could use some fancy order type, right? You use iceberg order that you split this order separately, but you are you worth hundreds of even thousands of billions of dollar, right? Even though if you separate these accounts, and you're still a huge wave. You will make huge wave, and you are huge whale in the financial market. So there's not like no point for you to not showing off, like to not demonstrating any wave in the trade floor, right? So other people would raise questions, series of questions.